I'm going to show you guys the simple trading model that I use every day to trade. And I took one yesterday, so let's get into it. So we can see here in NQ on the 4-hour time frame, price has been making all-time highs pretty much since the 1st of May. You can see, price is respecting bullish PD arrays, aka bullish fair value gaps being respected, bullish fair value gaps being created. So price is pretty much on an uptrend. So we've got one here, we've got more here. We can see these have been respected and price is just ripping towards the upside. So this is what I call high time frame bias. So my first step in my trading model is identifying high time frame bias, and in this case it is bullish. So when it's bullish, do we look for shorts? No, we look for longs. So in my lower time frame setups or lower time frame entries, I'm looking for longs only in 4-hour time frame. 4-hour time frame being the high time frame bias. So running down to the 1-hour time frame, I took a trade yesterday, which was the 11th of May, right? I think it's 11th of May, that's right. So let me check on my execution marks. So yeah, yesterday at 9:30. So I trade from 9:30 to 11 a.m. Eastern Standard Time. Right, we can see here price has been consolidating when the market was, didn't know where to go at 9:30. But we can see here if we put our range, it should be around like that. Okay, that's on a 1-hour time frame. I executed at about 10 o'clock, I think, yesterday. So we can see here Asia range, Asia market was choppy, European market was choppy. Being Monday, price is still trying to discover or still trying to think where it wants to go. So basically, I wanted to let Asia and Europe give me a bit of context before trading at 9:30. So you can see here, price is pretty much very, very choppy. At 9:30 open, price actually went all the way up, displacing towards the upside, attempting to break its previous high here at 29,314, but it pulled back pretty much right away. And I was actually looking at a couple of lower time frame charts like the 5-minute and 2-minute. I actually didn't really do anything till 10 o'clock, right? So just let me chuck in the 9:30 open and the 11 o'clock here so I can take away this indicator that might be potentially be cluttering my charts. So we can see a 9:30 open, it went all the way up, and what can you guys see what happened here? So on the way up, displacing towards the upside, it created a 5-minute fair value gap. And let me just annotate that here, 5-minute fair value gap. Price actually retraced all the way down at 9:55. I mean, until 9:55, price retraced all the way down here, and price actually respected this 5-minute fair value gap. And when it respects a FVG, and especially in the bullish instance, you remember my high time frame bias, I'm looking for longs only. So if it respects this FVG towards the upside, I'm only looking for longs. So right, so basically up till this stage, I was down at the 2-minute time frame, and I was still monitoring to see what price wanted to do. And we can see here it was a pretty strong rejection of this bullish fair value gap. And with this displacement towards the upside at about 10 o'clock, price also created this displacement, and it displaced, and actually a 2-minute inverse fair value gap was created. You can see here, and price actually just went through that, creating a 2-minute inverse fair value gap, indicating more strength towards the upside. And let's just take away this high time frame buy side liquidity. And basically, upon this candle, pushing past this 2-minute inverse fair value gap, my eyes actually leaned into this buy side liquidity here that was put in at around 9:48. That was 29,330. That was my drawn liquidity, and I went down to my 1-minute time frame and looked for my lower time frame execution model, which includes a turtle soup, inverse fair value gap, and I need to have at least a 1-to-1 risk to reward and also a opposing liquidity level. So do we have a turtle soup here on 1 minute? Yes, we do. Right here. So 1 out of 4 satisfied. Do we have a second one that satisfied my lower entry model, lower time frame entry model? The second one was satisfied as well. Here, 2-minute inverse fair value gap. And the third one is that do we have an opposing liquidity level here? Yes, we do. And then lastly, do we have at least 1-to-1 risk reward ratio? I normally put my stop loss below the displacement candle, or sometimes I can go even below this candle, but with price being so bullish towards the upside, I'm giving a lot of breathing room here. And my stop loss, for this time, I actually put it under the candle as well. So actually it was more than the risk rate was 1 of 1. And yeah, so the trade actually was executed at 10:04 and it fully closed 13 minutes later at 10:17. So if I was to recap and if I was to put it in text, guys, my step 1, right, is I look for high time frame bias. In this example, it was bullish. Okay, that's step 1. And now that we know that it's bullish, we go to step 2. Step 2 would be lower time frame entry model, right? The lower time frame entry model, the first thing I look for is I need to have turtle soup. Secondly, I need some sort of lower time frame inverse fair value gap being displaced through, which it did. Third of all, I need the drawn liquidity to have a liquidity level sitting in the opposing side. So it will be opposing liquidity level. And lastly, if my risk to reward ratio is less than 1 of 1, I will not trade this. So I need at least 1-to-1 risk to reward ratio. That's what I normally do. Risk to reward of 1-to-1 gives you a win rate that's much higher, right? For me, it's about 70% win rate. If you guys want a higher risk to reward ratio, obviously the win rate will be lower, but it's just that you probably get more profits. But for me, I need more win rates to keep me consistent, and that's how my edge plays out. So if you guys want a free trading checklist as well, it's in the link. Just go to the link in the description box below, and you guys can get it for free. So I hope this video was helpful for you guys, and if you guys have any questions, drop those in the comments below. Otherwise, I will catch you guys at the next one.